Meta shocked the market when it added a staggering $204.5 billion in market value after the company's Q4 earnings report was released, marking the biggest one-day gain by any U.S. company in history. On the news, Meta stock jumped 0.3% to a record $474.85. Investors couldn't contain their excitement as Meta's results surpassed all expectations. Then Meta dropped another bombshell on its investors, the announcement of its very first dividend. This unexpected move has caught many investors off guard, signaling a new era of maturity and stability for the tech giant. Now, Meta stock is very close to its 52-week high, and what does that mean for interested investors who want in? Is it too late? Did they miss out on this amazing once-in-a-lifetime run? To determine if this is the case, we'll discuss the driving forces behind Meta's incredible growth and examine important metrics that will determine whether this growth will continue. We'll also discuss the company's potential risks that you should consider if you want to invest in Meta stock. Let's dive right in. Welcome back to PST Markets. After this massive move on February 2nd, the parent companies of Facebook and Instagram now have a market value of $1.21 trillion. Meta's higher-than-expected advertising revenue of $38.7 billion contributed the most to this, compared with $31.25 for the same period in the previous year, which Wall Street analysts applauded. The company increased its advertising revenue significantly by implementing AI tools and technologies that recommended personalized ads for users of Meta platforms Facebook and Instagram, resulting in stronger-than-ever engagements. While advertising and AI are the focus of the day, CEO Mark Zuckerberg is still betting the metaverse will be a long-term win. Meta's Reality Labs unit, which focuses on virtual world technology, generated more than $1 billion in revenue for the first time in the final quarter of 2023. Despite this, Reality Labs' operating losses also increased to $4.65 billion from $4.28 billion in the same period in 2022, and the company said that it expects the unit's operating loss to increase even more in 2024. While we can't be certain about what the metaverse will look like in the future, we can still examine the company's most recent financial results to see how it's doing and whether it offers an investment opportunity. The business is doing well, evident in its Q4 earnings results. Meta reported revenue of $40.1 billion, beating estimates of $39.18 billion and showing revenue growth of 16% year-over-year, while its operating income grew by 62% year-over-year. The company also beat estimates as its EPS rose over 200% to $14 billion, or $5.33 per share, exceeding estimates of $4.97 per share, according to LSEG data. This extreme year-over-year profitability is partly thanks to Meta's efforts to cut costs. You might remember that around a year ago, the company laid off 10,000 workers, or around 25% of its workforce, which definitely contributed to the profitability we're seeing now. However, even though the layoffs contributed to Meta's recent growth, any investor who's interested in the company should also be aware of the key driver of growth for the business in the long term. To decide if it's too late to invest in Meta, or if the company still has room to grow and offers a great investment opportunity, we have to look at three metrics that could help interested investors make a decision regarding Meta stock. The first one is the number of users. As of 2023, Facebook has around 3.03 billion monthly active users worldwide, while Instagram has 2 billion. Remember, these are just two of Meta's offerings, and we didn't even mention WhatsApp or Threads. According to Meta's Q4 results, the company added around 300 million new active users year-over-year, which shows that despite the fact that the company is already massive with billions of users, it can still grow and attract more people to use its platforms. The second metric investors should be aware of when it comes to Meta is the average revenue per user or the price per ad, considering that Meta is primarily an ad business. The average price per ad on Meta increased by 2% year-over-year, also beating analysts' expectations, which said that the ad price would decline by 4% year-over-year. The third metric is ad impressions, which are basically how many people saw the ad. Meta's ad impressions increased by 21% year-over-year. When putting all the information from these metrics together, we could say that Meta still has room to grow its customer base, which many people online didn't think was possible anymore because of the company's size. A great catalyst for Meta is also its focus on AI. In the Q3 earnings call, Mark Zuckerberg touted Meta's plans to invest in AI, stating that it would be the company's biggest investment area in 2024. In a video shared on Instagram earlier in January, he also said that the company would be acquiring $9 billion worth of NVIDIA chips to support its push to scale AI for the long term. In the short term, AI could help Meta improve customer experience, add efficiency, and the creation and automation of Meta apps. This is done through the use of advertiser-focused AI tools, which boosted the company's advertising revenues in Q4 and are expected to help keep this momentum going. So that's where the business is currently, but there's another reason why many investors are jumping on the Meta stock bandwagon now. The company's recently announced dividend. Meta's dividend yield is around 0.4%. It will be paid quarterly and amount to 50 cents per share. The company will start paying that dividend on February 22nd. If you're an investor in any big tech company, you'd know not to expect dividends, especially from Meta, so this announcement was a massive surprise to many investors. But while shareholders usually welcome dividend payouts, what does this mean for Meta stock? The average yield for a dividend-paying stock in the S&P 500 is about 2%. Meta's payout is lower than that rate, but companies typically start small. Investors can now look forward to dividend growth and stock gains. Let's take a look at a company similar to Meta, Microsoft, for example. The company declared its first cash dividend on January 16, 2003. It was an annual dividend of 8 cents a share for a yield of about 0.3%. Microsoft stock was 10% higher a year later, and the 2004 annual dividend was hiked to 16 cents. Microsoft has grown rapidly over the years and today pays a 75 cents quarterly dividend. It has paid some $28 in cash dividends per share since 2003, which is more than the stock price when the first dividend was declared. So Meta could follow a similar path and increase its dividend as the stock price increases, meaning that Meta stock could start appealing to a broader range of investors, such as retail investors who only invest in dividends or institutional investors restricted to just dividend stocks. However, there are still some risks surrounding Meta stock, which every investor should consider before investing their hard-earned money in it. Since Meta relies very heavily on advertising revenue, especially from its social media platforms, any downturn in the online advertising market or regulatory changes affecting Meta's advertising practices could adversely impact Meta's financial performance. Meta's business practices, especially those related to content moderation and the impact of its platforms on society, constantly face scrutiny. Negative perceptions regarding issues such as misinformation, hate speech, or the addictive nature of social media may lead to reputational damage and regulatory actions. Lawmakers always want to know what social media platforms are doing to protect minors online, and very recently, CEO Mark Zuckerberg had to apologize to families who said their children were harmed by social media during a fiery hearing in the U.S. Senate. Congress is currently developing a new type of legislation that aims to hold social media companies accountable for all the materials posted on their platforms, which could pose a significant risk to Meta. With all of this in mind, is it now too late to buy Meta stock? Even though the dividend is at a quite modest level right now, it still makes the stock attractive even after the 20% rise on the 2nd of January. This is because now Meta executives, including CEO Mark Zuckerberg, are going to receive $2 per share this year, which gives them an advantageous position, meaning that it's unlikely for them to sell their shares in the public market, which would support Meta stock's price. There are some risks surrounding Meta, which could cause Meta stock to take a slight dip. Still, if that happens, an opportunity will be created for all the value investors who wanted to buy Meta stock but were waiting for it to go down, so it might be a good idea for current Meta stock investors to keep holding their shares as the company rides out the regulatory waves. Well, that is everything for now. What do you think? Is Meta stock a good investment right now? Please let us know in the comments below. If you haven't, please subscribe and like this video. Your support helps us continue our work. Thanks again for your support, and I will see you in the next one.